So there's this huge battle brewing over a local power company in Minnesota, a multi-billion-dollar deal. And believe it or not, the outcome could actually change how your essential services are owned and managed. Yeah, even if you don't live anywhere near there.
I mean, listen to that quote. This really gets to the heart of it, doesn't it? This isn't just some line item on a balance sheet. For the folks in northern Minnesota, it's incredibly personal. We're talking about who controls the land, the water, the very power that keeps their lights on.
So let's rewind a bit. Back in May 2024, this huge announcement drops about a company called Allete. They're the parent company of Minnesota Power. And just like that, a single press release kicks off this massive battle, pulling in everyone from global financiers to state regulators, and of course, the local communities. And the price tag? A staggering $6.2 billion. The investors want to do what's called a take-private deal. All that means, really, is taking a lead off the public stock market. So instead of being owned by tons of shareholders, it would be owned by a small group of private investors. Okay, so who are these investors, and what's their pitch? Why are they saying this is a good thing for Minnesota? All right, so on one side of the table, you've got Allete, the local energy company based in Duluth. And on the other side, it's a partnership. The main players are Global Infrastructure Partners, we'll just call them GIP, and the Canada Pension Plan Investment Board. But here's the detail you really need to know. GIP is owned by BlackRock. Yeah, that BlackRock, the biggest asset manager on the planet. So the buyers are making a pretty compelling pitch. They're saying, hey, this is great for Minnesota. They're promising a ton of cash to help the state hit its clean energy goals. And they're also saying, don't worry, nothing's really going to change. They're promising to keep the leadership, the workers, the headquarters, all of it, right there in Duluth. And, this is a big one, they say customer rates won't be affected by the deal. Okay, before we get into the pros and cons, we got to understand how your power bill is even set in the first place. It's not random. It's a regulated system, and it's all about balancing the company's profit with what's good for the public. I think a simple analogy will make this super clear. Everything starts with this term you're going to hear a lot, the rate base. It sounds complicated, but it's not. It's just the total value of all the stuff the utility owns to get power to you. Think power plants, poles, wires, the whole shebang. And here's the key. The company is allowed to earn a specific profit based on the value of that stuff. So here's that analogy I promised. Imagine the utility is a landlord, and all those poles and wires, that's their apartment building. Now there's a state board, the Public Utilities Commission, that acts like a rent control board. They're the ones who step in and say, okay, Mr. Landlord, this is the maximum profit you're allowed to make on your building. Simple, right? And that right there brings us to the million-dollar question, or I guess the $6.2 billion question. What happens when the landlord changes? What happens when a new owner with totally different financial goals buys the building? All right, let's get into the core of the conflict, the promises versus the potential problems. So, on the one hand, you have the supporters saying, look, these new guys have deep pockets. They can fund the clean energy transition way faster than a public company. But on the other hand, the critics are really worried. They're looking at this new business model, which is all about high returns for investors, and they're thinking, this is going to mean higher bills for us and less transparency for everybody. And this chart really lays out the conflict perfectly. Right now, a utility like Minnesota Power is allowed to earn a return of about 9.7%. That's the rent set by the state. But private equity firms like GIP, they're usually aiming for returns of 15 to 20% for their investors. That's a huge difference. So you have to ask, where does that extra money come from? And that brings us to our first big knowledge gap. A privately owned company just doesn't have to report as much publicly. So here's the question we don't have a great answer for yet. How do you make sure a private monopoly is playing fair when you can't see all their cards? Now, because we're talking about electricity, something we all need, a deal like this can't just happen. It needs a referee to sign off on it. In this case, that's the Minnesota Public Utilities Commission, or the PUC. And this whole process takes a while. The deal was announced back in May 2024. Then it went through months and months of hearings. A judge just made a recommendation in July of 2025, and the final decision from the PUC is expected this October. And that judge's recommendation? It was a bombshell. After looking at all the evidence, she came back with a really powerful statement. It's not a final ruling, mind you, but she basically said the buyers just didn't prove this deal was good for the public, and she recommended that the PUC should flat out reject it. Now, let's say the deal does get approved.
the regulators can still add some serious conditions. One of the most important tools they have is called ring fencing. It's exactly what it sounds like, a financial firewall. They build a legal wall around the utility's money to make sure it's protected. That money can only be used for the utility itself, so it can't be siphoned off to pay debts for the parent company or just to fatten investor pockets.
This leads us to our second and maybe even bigger knowledge gap. It's a fundamental question, really. Can a business model that's built to squeeze out double-digit returns for investors ever truly line up with the mission of a utility, which is to provide affordable, reliable power for everyone?
So let's zoom out for a second. This whole fight in northern Minnesota, it's not just some isolated event. It's basically a test case for a much bigger trend happening all over the world. It's all about who gets to own the essential things we all depend on. So why is Wall Street so interested in your local power company all of a sudden? Well, for one, utilities are super stable investments. They give predictable returns. But the big thing now is the green energy transition and the insane power demands from AI data centers. That requires trillions of dollars in new investment. And these firms see a huge opportunity. Plus, let's be honest, you're a captive customer. You can't just decide to get your electricity from someone else, can you?
And that's why what happens in Minnesota really matters. It could set the standard for the rest of the country. Which leaves us with this one big final question to chew on. As things like electricity and water become just another asset in an investment portfolio, who is really being served here? Is it us, the public, or is it the portfolio?